Every empire believes its money is untouchable. Every state claims its promises will outlive time itself. And every time, history shatters those claims. From Rome to France, from the Confederacy to modern Lebanon, people have woken up one morning to find their savings turned into scraps of paper, their salaries stripped of meaning, and their futures destroyed by systems they once trusted. Collapse is not the exception. Collapse is the rule. The real question is not whether systems will fail, but whether you will still be standing when they do. The illusion of permanence is the deadliest mistake in finance. We look at our bank accounts, we trust our national currencies, and we assume they rest on solid ground. But money is not a foundation. Money is belief, and belief can evaporate overnight. That is why history is cruel, but also invaluable. Every major collapse leaves behind traces showing what protects wealth and what simply disappears. If you look closely, you'll notice something consistent. Those who survive disasters are not the ones who believe the most, but the ones who question first. The Byzantine Empire is a powerful example. After the fall of Western Rome, it managed to survive for centuries, and at the core of its economy stood the gold solidus. It was so trusted that merchants from Europe to the Middle East and Asia accepted it without hesitation. For a long time, it functioned as the de facto reserve currency of the medieval world. One would naturally assume that Rome's earlier disaster with the silver denarius had taught a lesson. The story of emperors debasing it until it became little more than metal scrap is well known. But history repeated itself. Centuries later, Byzantium played the same game with gold. Purity was reduced, alloys were added, value was stretched thinner. At first, no one noticed. Then, trust fractured. The coin that once anchored Mediterranean trade turned into political fiction. When credibility vanished, stability followed it into ruin. So who survived? Not those who trusted official promises. Those who held real gold or land beyond the reach of the state preserved their wealth. Everyone else watched their money quietly dissolve. This is the first unchanging lesson. Governments cannot resist the urge to dilute their money, and when they do, real value flees into assets they cannot counterfeit. But not every collapse is born from deliberate monetary manipulation. Sometimes systems are overturned by sudden shocks. The Black Death of the 14th century is the clearest example. In a matter of years, nearly half of Europe's population vanished. Cities emptied, villages disappeared, trade collapsed. Yet the economic consequences were not limited to destruction. With labor wiped out, work became valuable. Survivors could demand higher wages. Land and food became abundant relative to people. Those with liquidity, silver, goods, or simply the ability to work, gained leverage they had never known. Properties that were once unreachable changed hands for a fraction of their former price. The market shifted decisively in favor of buyers. This picture is not unfamiliar today. During COVID, we witnessed a modern version of the same pattern. Supply chains broke, governments printed trillions to keep the system alive. The result? Those with liquidity accumulated assets, while those living paycheck to paycheck fell further behind. In the United States, housing prices surged, stock markets recovered rapidly, and millions struggled to pay rent. History's rhyme is unmistakable. Pandemics redistribute wealth. Survivors of the Black Death climbed the social ladder. Those who emerged from COVID with cash acquired assets others could no longer hold. The lesson is uncomfortable but true. Crises reward the prepared. The banking collapse of Renaissance Florence teaches another vital truth. There is no such thing as too big to fail. In the 1300s, Florence was Europe's financial hub. Banks like the Bardi and Peruzzi extended massive loans to kings. When England's King Edward III stopped paying his debts, these giants collapsed. Deposits vanished, trade froze, and the city descended into chaos. People learned a hard lesson. Size is not safety. Reputation is not protection. This lesson repeats across centuries, from Florence to Lehman Brothers to the banks of Lebanon. Institutions exist to generate profit, not to guarantee your survival. When they fall, they take you with them. Those who endure are the ones who understand in advance that promises can fail. The American Civil War is also a story of financial collapse. The North printed greenbacks, the South printed graybacks. As paper multiplied, value evaporated. Inflation rendered wages meaningless. In the South, money effectively died. People carried sacks of bills to buy a loaf of bread. Those who survived held real assets: land, food, gold. This was America's own experience with currency collapse, and it is often forgotten. The French Revolution tells the same story. Assignats were issued with hope, printed without restraint, and quickly became worthless. The public rejected paper, demanding food and metal instead. The revolution was suffocated by its own money. The winners were those holding what the state could not print. The Asian financial crisis of 1997 is the modern mirror. Countries burdened with dollar-denominated debt collapsed. Currencies disintegrated, unemployment exploded. Ordinary people paid the price, while global capital acquired assets at bargain prices. The lesson is clear. Borrowing in someone else's currency is a death trap. Lebanon, after 2019, is the contemporary version of this story. Banks locked their doors. Accounts were frozen. The currency lost over 90% of its value. Everyone who trusted the system was wiped out. Those who survived had diversified early. History delivers one message over and over. Collapse is inevitable, but being unprepared is not. Real assets, real skills, and real production always endure. Money loses meaning, but bread, labor, and value creation never do. The question is simple. When collapse comes, will you be holding promises or something real? History does not repeat itself word for word, but it always crushes those who ignore it.